Do you think before the speech, Chair Powell was aware of where the market was trading? And is it counterproductive in his mind if the market gets ahead of itself for what the Fed's efforts are to cool things down? Is he okay? In the past, Fed chairman wouldn't want an 800-point drop in the Dow. That would be something they'd try to avoid. In this case, do you think he was okay with that and it was mission accomplished?
Well, first, good morning. And I think, in fact, what he was trying to do and succeeded at doing was keeping financial conditions relatively tight. We've talked about this several times in the past. And in that regard, the drop in the market was probably, quite consistent with keeping financial conditions tight and therefore not unexpected and probably not unwelcome by the Fed. Recognize that, as I've said several times, part of the challenge here is the Fed sees a certain reality, markets have a certain hope, and the reality has to triumph over the hope, and that's what happened yesterday.
Do you agree, Roger, that if you're headed to a terminal rate, is there a reason to moderate the increases instead of getting there more quickly with, if you're headed there like an antibiotic, for lack of a better analogy, you're sick. You don't do, half doses. You want to knock it out with a full dose of the antibiotic. If you're going on a trip, you want to get there as quickly as possible. You don't want to just, go in half measures to get where you're going. Are there financial imbalances that can be avoided by going a little bit more slowly, or is he really being data dependent and he just doesn't want to tell us?
Well, three parts to the answer. First, recognize how quickly they have gone, an unprecedented 4 75 basis point moves. So it's not as though they have started off the trip at a slow pace. They've moved very quickly. Secondly, as they said in their statement, we also know that means there's a fair amount of tightening in the system. Policy works with long and variable lags, as they said in the statement, and then he repeated. So put those two things together, and I think it is appropriate to suggest we're still going on a journey. We may go a little more slowly because we don't know exactly how far we have left to go, and we don't know what the impact fully has been just yet because it's not baked in. And so what he was saying yesterday is, given all those things, it's probably appropriate at some point to have the conversation and indeed to slow the pace at which we're moving. But he also said two other things that are very important. One is now it's how high, and he indicated that the terminal rate is higher. And secondly, obviously, how long, and I think he's continuing to suggest that they'll stay higher for longer than the market expected. So that I think is the three-part message.
Yeah, I like the first part, and you said it well, and he said it well. It's the second part that I think was done for a reason, and I'm not really sure that anybody knows what the terminal rate is because we don't know how quickly inflation is going to come down. The terminal rate is going to be based on where inflation is, and if they so misjudged what inflation was going to be and got behind the curve and used the transitory word for way too long, I just don't have a lot of faith that they can definitively say, okay, we now think the terminal rate is higher. It's like they said that just to make sure the market it didn't take it as a pause. It's almost like they arbitrarily raised the terminal rate just to make sure the market didn't get ahead of itself.
I think it's not quite that nefarious, Joe. So first, let me agree. Yes, no one knows exactly where they're going to end. You may recall I've said a few times in this show that the 4.6 was probably wrong, and it was probably going to be closer to 5 to 5.25. Chairman Powell sort of suggested that yesterday. You're certainly right that where we end, where they end, depends very much on incoming data. The last CPI read was very hot. The JOLTS read earlier this week suggested labor markets are still tight. So I think he puts those together to say, all right, the September 4.6 looks like it's probably too low, probably something with the 5 handle. But to your point, we won't know until we get there. I do think that the message of we move very quickly, things of monetary policy works with long and variable lags. Therefore, we're probably going to slow the pace. And he said pace is less important now than terminal rate and how long you stay there. So he's trying to talk about a Rubik's Cube of 3 or 4 different dimensions and try to get it all aligned.